Hi, welcome to this video today, which is on the 13th of February. It's Wednesday, 7:30 p.m. GMT. Just going to look at some trade setups, which include the New Zealand dollar, and we're going to the charts in a moment. Now, one of our favourite ways of trading is basically to look for a price spike in relation to a news event, which we think is overdone. It's just a knee-jerk reaction, and it will fade. Now, we personally think that the spike up in the Kiwi in relation to the RBNZ is overdone and presents a selling opportunity. Now, in terms of this video, I'm obviously going to go through my technicals and the sentiment behind the charts, but I also want to discuss the US-China trade deal, which is the big story in financial markets at the moment and will create significant volatility. Either way, in terms of the conclusion, whether they reach deal or whether they don't. I also want to discuss, if you do see a price spike, what is the best currency to sell the NZD on? Should you do more than one? My own view is yes, and I'm going to explain my logic. Right, let's go to the charts and go through the setups, but keep in mind, it's my view, as of right now, it can change in line with the market conditions. If you want all our trading techniques, our daily technical analysis of 14 major Forex pairs, you can get live access to our member center on the link beneath this video. Right, let's go to the charts. Okay, we're on the chart of NZDUSD, and I'll draw my levels in a moment. But just very quickly want to go through why I think this price spike is overdone. I don't see it following through to new highs. I see the Kiwi going lower. Now, in terms of this quote, typical one from the media, New Zealand dollar jumped as much as 1.7% on Wednesday after the country's central bank said it expected to leave interest rates at their current levels the rest of 2019 and all of 2020. That's from the Financial Times. And what's new news about that? They've said this before. They sounded quite upbeat in their statement, but it doesn't change the fact that they see rates on hold till 2020. And also look at this quote down here. We expect to keep the OCR, or interest rate, this level through 2019, 2020. The direction of our next move could be up or down. It's just basically hedging their bets. They can't see 2 years forward. Okay? Yeah, like I said before, I have enough problems trying to see a day forward, let alone 2 years. Things change. And in terms of the Kiwi, I just think market is just too optimistic. Now, there is also some strength in the Kiwi due to optimism about US-China trade talks. I'm going to cover them in more detail at the end of this video. But what I'm going to say here now is the trade talks are a long way from a conclusion. Markets have bought risk, currencies and assets on the basis there's going to be a good conclusion. The facts don't point to that, but I'll go through that at the end of the video for anyone who wants to know my logic and reasoning. Also bearish for New Zealand. Two main trading partners slowing up, China and Eurozone. China in particular, trade deal or no deal. The economy is slowing up fast, okay? That's going to weigh on risk sentiment and risk currencies like the New Zealand dollar. If we look at things in perspective, USD is a better interest rate. So there's no carry involved in terms of the New Zealand dollar. It's also got a reasonably strong economy. I know people got very bearish on the US economy recently, but CPI today was pretty decent. The Fed, there's still an off chance that they could hike rates this year. I know the market's totally priced them out. Things aren't going to get any worse for the USD. Also, it's a safe haven currency. There is a lot of worry about global growth, trade talks in the mix as well. I just see this rally as a sell. Now, what I quite like about it is if you, and I did this on my chart earlier today for anyone who's on my pages, if you draw a trajectory in, sorry, let me just get it right, and that's the way I drew the trajectory. Price is almost the same as it was earlier today. Hasn't moved. You just have the initial knee-jerk reaction and no follow-through. I'm not saying there won't be follow-through. There could be. But we think the Kiwi is a sell. Where would we sell it? She's just right at, sorry, let me draw that line straight. She's right above a round number and the 20-day moving average. And we like round numbers, yeah, because if they break, okay, like when it's gone to the upside, yeah, if I was a bull, I'd be looking for follow-through buying. There isn't any follow-through buying at the moment. If it comes back down through the level, I'd give it 30 pips, 67.70, I'd be a seller. Where do I think the Kiwi is going to go? Back down to these chart lows. Okay, so you're really looking at about 64.40, could go even lower than that longer term. Where would you place your stop? I'd probably be back behind these candles here. Sorry, I can't get my line straight. So basically, back behind the bodies over here. So about 69.40. Sell it at 67.70. And then look for follow through to the downside, okay? The big picture for the Kiwi for us hasn't changed. It remains overbought, and the risks that I've just outlined going forward, in my view, favour Kiwi weakness. Now, of course, we might power on. If we powered on up towards these chart highs, we would just reset our entry and try and catch weakness off the 69 level or around the 69 level. Now, in terms of anyone new watching our videos, if you look at sentiment against price action, you see price action in a very different way. And we're big fans of just using simple sentiment analysis. Yeah, it gives different context to the chart and the levels. Now, in terms of if you're a Kiwi bear, should you sell it on more than one currency? I'm in favour of doing this in terms of the Kiwi is generally overbought, but I'm not sure which is going to be the best performing currency. Okay, I think yeah, in terms of the USD, yes, I expect it to go down, but I want a faster moving currency to go short on the Kiwi. And I'm sure regular viewers will know one of my favourites has been GBP NZD as a Forex pair in recent weeks. Nice fast moving pair, and the pound has fallen back, and I'm looking for a rally. So let's go and take a look at the chart of GBP NZD. All right, we're on GBP NZD daily chart. We've done a few videos on this pair. You can also track our levels of entry, stop and target in the guest pair section of the member centre on a daily basis if you wish. Now, in terms of GBP, we've been bullish for a while and got a few nice trades in it. This break up here, we took over 300, bought the dip, another 300. This dip went a bit further than we thought, bought again, did two trades, one out for 300 pips and the other was out at break even, so 150 overall. And I think I said it in the last video, nice volatile pair. When we get towards 300 pips, we'll normally take half our trade off the table, let the other half run, okay, to reduce exposure. Now, in terms of the price action, today, nice big red candle down. That's to do with Kiwi strength, not pound weakness, as we said earlier. And I think it's a buy. Now, before I just discuss my levels, in terms of GBP for just new viewers, we're heavily bullish. Pound very oversold historically. It's all about Brexit, a hard deal. We don't think that's going to happen. UK wants deal. So does the EU. Their economy's in desperate trouble. They will concede enough for a deal to be done. Also, UK economy doing pretty well. One of the best performing economies in the EU. If it wasn't for Brexit uncertainty, rates would be on the rise. So you've got an oversold currency in the pound, overbought in the Kiwi. That makes this an attractive cross for us to trade. Now, in terms of we want to buy, where would we buy? If I was doing it purely technically, I'll probably come in through the 20-day moving average and basically the open of today. But that's too far away from me. in terms of if my reading of this candle is correct, it's to do with misplaced optimism about New Zealand, then it should retrace pretty quickly. So I'm going to come through a level which I know is watched by big institutions, which is this level here. If I get my line straight, 190. So be a little overflow around the level. Sellers and buyers, I think the buyers will prevail. We get turbulence around round numbers, so I would go 190.30. Get away from the turbulence, okay? Now, in terms of stop, where would I put my stop? Well, this candle here has come down, but hasn't got down to here. So really, well, you probably get the gist of what I've said without me drawing a trajectory in. I'll put the stop back behind this level, okay? Then see if she runs. I'm not too worried about these candles here, okay? In terms of stop, where would you place your stop? Well, you've come clear of one round number, okay? What you want to be is clear of the next round number with your stop, because basically it's a volatile pair. So I would actually say the next round number back, obviously, is 189. I'd go 188.50, okay? So you're going to have to see an aggressive sell-off to get the stop. What happens if she falls lower? Well, if she falls lower, I'll reset my long entry, okay? Where could we go to? My own view is, well, I'm sure regular viewers know that is my ultimate long-term target, but I realise that is well over 1,500 pips from where we are now, but I do believe we will get there. I think, yeah, a shorter term target would be here, 195. Okay, you see as we came down here, we battled around the round number and eventually slipped down. Tried to get to it on that candle, couldn't. If we come up again, we'll get to that level in my view, then we should run on to the upside. So you've got really near enough 3-to-1 to first target. Then obviously if it got to the second target, be much better risk to reward, but obviously it's got to get there. But again with this chart, when you look at the sentiment behind it, it does give the chart a different context. I don't think we'd have made any money out of this if we were just trading it technically. Reading a sentiment in this pair has been very important to us. So we've had a few decent trades out of it, hoping we're going to get another one and our winning streak carries on. In terms of combining a couple of pairs, or even more if you wish, if I've got a currency really overbought like the Kiwi, but I think USD or NZDUSD looks very attractive. But this one, is in a cross, so overbought being oversold major. So again, I think it looks really good. And when doing a trade like this, I would just treat it as one trade. So let's say I'm risking 1% on the trade, do 0.5% in this one, 0.5% in NZDUSD. Other pairs to look at, actually. NZDCAD, which is, I think, a long-term sell. Mentioned that in previous videos. The bounce in the NZD and the CHF and JPY, they look attractive trades as well. Now, in terms of, I mentioned earlier about these trade talks, everyone really optimistic about them. But it's not just about trade, is it? It's not about, how much China exports to the US. It's much deeper than that. You're talking about intellectual property, technology theft. US very concerned that China is getting a lead over them in technology, okay? Also, US very concerned about state subsidies giving Chinese companies an unfair advantage in the US's view. It's not just about trade. There's going to be no quick conclusion to this, I don't think. China won't want to concede too much. Okay, their economy is doing really badly. The last thing they need is to concede too much to the US. Okay, I just feel that the optimism about these talks is just overdone. Yeah, it's almost like a deal is going to be done when you read the media. I think we're a long way from a deal being done, and it is going to influence the Forex markets because nervousness about a deal not being done will obviously boost the safer currencies on the riskier currencies. And the NZD is a risk currency. USD a safe haven. Okay, GBP would be considered a safer currency than the NZD in my view. I just feel decent potential in the markets as we move forward. We're going to get a lot of volatility this year. We've already had some decent volatility in the first couple of months, but it's just going to go way higher in my view. Right, I think I've covered everything I need to. Don't think I've forgotten anything. So that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.